Have we all been fed a big fat lie? Is the crypto community with its confirmation bias believing strongly in the Bitcoin ETF approval, whereas Wall Street is betting against this? Is this what's happening? Let's have a look at what Wall Street is doing. Let's have a look at the derivatives market on the CME, on the Chicago Mercantile Exchange. So that's this building over here. It can't get more traditional finance than that. What we have over here is how much open interest for futures, for Bitcoin futures is there. So in black, we see the Bitcoin price. In orange, we see how many people in traditional finance are interested in betting on the price of Bitcoin. And that's now at an all-time high. We've got 4 billion worth of derivatives contracts on the CME. Never in the history of Bitcoin has Wall Street looked for that much price exposure to Bitcoin. Now those are just futures, it's not a spot ETF, so this does not directly impact the price, but it does show how much interest there is. When the spot ETF gets approved, then some at least of that 4 million might move there. Futures are just one kind of derivatives. There are also options, put and call options. So options are not an obligation to buy and sell the price, it's the option to buy and sell the price. In the end, people buy those instruments to get a levered position on the underlying without buying the underlying. Now the great thing about the options market is that we can actually see what direction do people position themselves in. Are they betting on rising prices, so are they buying call options, or are they betting on falling prices, buying put options? And this is exactly that chart. It's a 2-year chart. In green, we see the open interest for call options at an all-time high and the open interest for put options. Also elevated, but not as high as the call position. So in aggregate, people are betting on rising prices. Now, one reason for that could be the fundamentals for Bitcoin. For example, the illiquid supply. Again, in black, we've got the price, and in orange, we've got the illiquid supply. And note how supply got a bit more liquid when we topped out at around 60 to 69K. But since we're going down / sideways, the illiquid supply is steadily increasing. And the higher this is, the better the price can appreciate as people continue to dollar cost average into Bitcoin. So the idea is that there is an inverse relationship between liquidity and volatility. As liquidity dries up, volatility goes up. So people that buy into Bitcoin push up the price higher and higher. And that effect is stronger the more illiquid the supply is. The main problem with crypto YouTube is conflict of interest. Too many YouTubers shill garbage, promote garbage, and fill up their pockets in the background. Not this channel. Instead, there's simply the offer where I share my skills, my perspectives to you, and where I also share direct access to me, where you can ask me any questions. Feel free to check it out. The premium membership link is down below. But that begs the question, why is traditional finance suddenly interested in Bitcoin? Is it the potential price appreciation? Maybe, maybe not. I think it has to do with correlation. Traditional finance people think in portfolio construction. They think in having different assets in a portfolio that are as little correlated to one another as possible. If you've got asset A that goes up and down, and you've got asset B that doesn't go up and down at the same time, but that goes randomly, sometimes up, sometimes down, then that's good for a portfolio, because then potentially you can cancel out the volatility of different assets, reducing the risk, reducing the volatility of the overall portfolio. So that's the fundamental idea of diversification. The fundamental idea is that you can reduce overall portfolio risk without reducing the return, simply just by buying assets that behave differently during different times. A simple way to think about this is that on the one hand, you want to own the ice cream shop, but on the other hand, you might also want to own the shop that sells umbrellas. So independent of the weather, you will always make profit. Now look at this. This is the correlation coefficient of the S&P 500 versus Bitcoin, the 90-day correlation. And this is hovering around 0. Sometimes it's positive, sometimes it's negative, but it's relatively close to 0. Look at the correlation coefficient of gold versus Bitcoin. Also very close to 0. So that means those assets don't move in tandem. They are great portfolio diversifiers. A correlation coefficient of 1 means the assets always move in sync. A correlation coefficient of 0 means they move pretty randomly against one another. -1 means they always move in opposite directions, right? So asset A goes up, asset B goes down always. So you want to have assets that have very low correlation to one another. You want to have assets that have either zero or even negative correlation. That's how you reduce portfolio risk, and Bitcoin is great for this. Just have a look at the correlation coefficient of Ethereum versus Bitcoin. Very close to 0.8, 0.9. In other words, you can't diversify your Bitcoin position well by buying more Ethereum. They always move in similar direction. You want to diversify across asset classes. You want to own some crypto, you want to own some stocks, maybe some precious metals, maybe some property. But you don't want to have all your wealth just in one type of market. Because when the property market, for example, goes down, then all of property, most houses go down. When crypto goes up, then most cryptocurrencies go up. But when you own everything, then your overall portfolio volatility is relatively low. It's relatively risk-free. So when the assumption is that all of your assets will appreciate over the very long term, you simply just buy everything to cancel out all of these wicks. So yes, I do believe that traditional finance is coming. Please give this a like to help the channel grow. There's also a Telegram, link is down below.